Hello traders, Cousin Benny coming to you from theclosingprint.com on April the 1st, 2017. In this edition of your weekend video newsletter, we'll cover all of the indices which closed higher. As you can see, European stocks, Nikkei and Hang Seng were all lower. Presently we have seasonality, April being the strongest month historically. Anytime in the periods between the last 2 years, 5 years, 10 years, all the way out to 20 years. April is typically the strongest month of the year. The bond stock ratio is bullish. We're 7 months into a new trend, similar to what we saw in 2012. Following that period, the 2 years were bullish into early 2015. There's a start of a new quarter. Typically we see buying and discretionary. Stocks continued to put in 52-week highs and all-time highs. As XRT Retail, we have the travel industry group, home builders, see bullish action and follow-through. The most important thing to take away is that junk and high-yield corporate debt and oil are all bullish, and relative to the S&P 500, we'll show you charts of that. These are outperforming and continue to be our barometers for how we can expect the markets to act in the short term. For the most part, the S&P 500 and the SPDR ETF are flagging out near this descending channel, with RSI inflecting lower on Friday and a shooting star, if you will, by the end of the day. We do have the 50-period moving average rising up. Price is above the 9 and 20 EMA. But more importantly, tick cumulative continues to show that more stocks are being bought on the uptick than downtick. So we're looking for bullish resolution this week. MACD histogram is turning up and stochastics is pointing higher. We did see elevated volume on Friday. However, most of the week looked pretty decent. And we'll watch what junk bonds, HYG, high corporate yield, and crude tells us to do this week, along with tick cumulative. The SPY 60-minute chart remains in this descending, broadening pattern. We had resistance last week at 236.70. That remains. And we also have volume by price support right along these levels at 235.50. There was a lot of volume blocks that traded in this zone. We do have MACD turning lower and stochastics almost in the green zone. But note what tick cumulative is doing. It's showing that they're buying on this time frame as well on the uptick for this indicator to continue to push higher. So overall, this looks more bullish than bearish. MACD cross for sure. And we did have some selling into the evening session with a shooting star at the end of the day. Once again, volume by price rules at this point, even though price is below the 9 and 20 EMA. The NASDAQ Composite also looks very bullish. The sector heat map also gives us a reason to be cautiously bullish. As we can see back here in October and November, we've gone from red to green and chartreuse very quickly and remained that way for nearly a month before we started to see yellows and reds start to creep back in. Now we've gone from red and in the present time, over the last month, we've shifted from yellows and oranges to reds back to more yellows and lime greens. So sector-wise, this is looking more bullish than bearish at the present time, and you should trade accordingly. Note the international indices, all of which look pretty decent as well, and no red for the most part, except for Japan and China. If we look at the IBD 50, many of these stocks showing muscle on RSI, so there's a lot of buying still remains on these names. Activision Blizzard, ATVI, continues to show up on the IBD 50. A further pullback, similar to what we're seeing here, is not out of the question. We did see buyers step in on Friday. We look for this to bounce and move higher. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekly video newsletter. I'll send out a watch list later Sunday evening and a list of stocks that we're looking at, probably in a chart format before the opening bell on Monday. Be sure to check us out live for the pre-market show at 9 a.m. Monday. We'll see you soon. I hope this helps. Take care, and we'll talk to you in the trading room.